So this is the number one mistake you definitely don't want to do when you buy a house.
How much do I have to make to be able to afford, and what amount can I afford?
I think that's the biggest misconception that people think when they go to get approved for a house. It's, do I have enough money?
Did you know that your job could potentially qualify you for Hometown Heroes?
And what exactly is Hometown Heroes? What does it do?
A program from Florida Housing. They help you with your down payment. Have you ever seen a realtor actually selling you against buying a home? Check this out.
Hi, this is Daniela Zoppe with KW Luxury. Just wanted to let you know that we have some great content for you here today, and I want to introduce Justino.
Hello, we are part of the JDZ Luxury Team at Keller Williams Smart One, and we are here to get some questions that our customers ask all the time. And we have somebody very special in the room today. Take it over.
Yes, hi, I'm actually Charles here at Neighborhood Loans, located here in Lakeland, Florida. And I'm really excited to meet with Justino and Daniela today. We're going to be talking about a lot of really cool topics related to real estate and what scares a lot of buyers, why not to move one way or another whenever it comes to purchasing a home. So super excited to go over that.
Awesome. So let's start with our first question that people are always asking.
Well, some of the people that want to buy these days, they're just not sure on the process. So they're intimidated, right? And they feel kind of stupid for asking questions. So I think the education is one big part of that puzzle. So one of the bigger questions that I get often is just, I don't know if I can afford a house. How much do I have to make to be able to afford? And what amount can I afford?
Yeah, so this is a classic, right? They always ask, hey, I make X amount of money. How much can I qualify for on the house? And the answer to that is kind of complicated because we have to look at everything. We have to look at your debts. We have to look at your credit scores, how much money you have. Are we trying to do down payment assistance? Are we trying to do just a standard FHA loan or conventional? So it's a hard question to answer. So usually the biggest piece is discussing with us directly so we can really go over all the details together and find out where we stand essentially.
I think that's the biggest misconception that people think when they go to get approved for a house. It's, do I have enough money to get the house? They don't realize there's so many other factors and that it's,
For sure.
There's so many different variances on not only getting approved, but what loan structure to use, how to do it, and what to prepare for in advance. So you're going to help them get some answers for you guys today.
Awesome.
And there's some great programs out there that people don't even know about, right? So Hometown Heroes is coming back.
Yes.
So why don't you tell us a little bit about that?
Yes, lots of details on Hometown Heroes. So I know we're not going to be able to cover all of it in that one video, so we're going to include a link below. It has a list of the different professions. It has different down payment amounts that you would be getting depending on your loan amount, and then also your criteria. So guidelines-wise, we usually work on that ourselves. And then we can help you through that. But if you were interested, you can look through some of those guidelines. Did you know that your job could potentially qualify you for Hometown Heroes?
And what exactly is Hometown Heroes? What does it do?
Yeah, so essentially Hometown Heroes is a program from Florida Housing. They help you with your down payment essentially. And not only your down payment, they can actually cover a portion of your closing costs, which is why it's such a popular program right now. A lot of people don't know that. They can get a mix of down payment assistance and some help on the seller credit, and the seller can help on top of that. So we literally helped a family earlier this year, and their cash to close was like $1,500 or $2,000 because you could mix this down payment assistance with the seller credit help.
That's fantastic.
That's amazing. So if you don't have a big cash flow and you're kind of sitting there thinking, well, I can't be a homeowner right now, then these are the conversations we're having because we just want you to know that there's a lot of options out there, but it really comes down to working with a professional. No one kind of succeeds alone. So even us with what we do, we always try to find the best people doing the tasks that we need and kind of join forces so that we can all help our clients. But if you don't know what you don't know what questions to ask. So that's why it's great having a resource like Charles, because whether you're ready or you're just thinking about it, or you may need to do a little credit repair, it all starts with conversations, right? And you would agree that sometimes you've taken some of our clients and you've done some work to be able to help prepare them to get to the position where they can buy, because maybe they're not ready yet, and that's okay. Everybody's in a different spot. So tell us a little bit about what your team does to help that way.
Yeah, and Daniela, you're bringing up a really good point because whenever you have a team, if you have a team of 3 or 4 or 5 different people who have never worked together, like you have a real estate agent who's never worked with that specific bank, and that now they're working with an insurance company they've never worked with, and now you have a real estate attorney involved in the transaction, and you have a closer, an underwriter, a funder, an appraiser. There's a lot of different parties, and so if you have if you have people that have never worked together as a team, then hiccups and issues that happen during the real estate transaction are amplified. And so that really makes a big difference whenever you work with a team that has worked together for several years. We know, hey, this is an issue. We need to work on that together. We're able to proactively find issues before they arise, and that's a big, big piece in real estate. So yeah.
And we know the questions to ask because we've been there before.
For sure.
It's kind of like having a sports team when you mix all the players up. Now they're playing for the first time. They didn't know he's going to throw the ball that way. We kind of know each other and how we move, and we know a group of people. The three people you see here in this room is not who you're working with. You're working with us as the heads, but each one of us has a team behind us that help us make sure we're getting those jobs done. One of your number one positive compliments that I get when working with you, or we get when working with you, is the fact that we work with so many people that do not call us back, do not get us the information that we need. It is so difficult to get a hold of them, and you are by far the number one person that will always get back to us in the shortest amount of time and with more info than we even asked for.
Yeah.
So that is the number one compliment that my clients have come to me and like, man, thank you for referring Charles. He's been amazing.
Yeah,
That's
your
awesome.
feedback,
Yeah.
like your feedback is always very, very good.
Hey, by the way, this is not scripted. They've never told me this, so I feel great. I feel great
No,
about
it's
this.
really good. And here's the thing, like from our perspective, like we're one piece of the puzzle, right? So we're basically the face of that first part of the transaction, but then we introduce everybody along the way. And so if our team doesn't mirror the service we're giving, the last piece of the puzzle, if it happens to be a bad service, it's going to reflect back on all of us. And so when we're all aligned, and like you said, no transaction is perfect. There's always going to be hiccups. There's always going to be things that happen because every file is a little different. But it's not really about that. I think we're all up for the challenge. It's a matter of communicating so that we can anticipate the challenge. And a lot of times you've called me, we have a problem, not a lot of times, a few times. And here's how we fix it.
Yeah.
I love that
The answer's
conversation.
already there.
Yes.
Yeah.
Yeah. So
Right.
the biggest, and this is a little tip for other lenders out there, is if you have a problem and there's an issue, find the solution to the problem first, and then come up with like option A, B, C, and then call with the bad news. And here's a lot of lenders, what they don't end up doing, or if they're not local, is they hide behind the phone.
They don't call.
They don't call.
Yeah.
And then the issues gets bigger and bigger and bigger over time. And then we're 5 days before closing, and you get that terrible, dreaded phone call, and you're like, hey, sorry, we're not closing in 5 days. And you're in boxes, you have rented your U-Haul truck. Like, it's very, very nerve-wracking for a lot of clients. So it's important to know if there is an issue, usually we find it within the first 5 to 7 days. And whenever we're there, we problem solve it. And that way we have a lot of lead time leading up to our closing date. So
Yeah. And people don't realize, like, they just think, oh, we'll go on, and not to speak poorly of any particular
yeah.
lenders, but, an online service is very different than an in-house service. And what I mean by that is, like, there's attention to detail. There is a human on the other side that you can reach out to and have conversations. If Charles is not available, he has a large team. So it's not just some bot on the other side saying, hey, we'll get to you when we get to you. It's a big difference. So when I have people that come to me who may have gotten a pre-approval that's coming from, an online platform, my first reaction was like, okay, got to introduce them to Charles, because I know that I've done those before, and those experiences they're challenging. Oftentimes you don't find out that there's an issue until the very end. And exactly what you said is what happens. I've had people before, one particular lender, and we won't mention names, but basically didn't say that there was documents missing. So my client was thinking everything was great. I wasn't updated with anything other than we're good to go. And 2 days before closing, I come to find out that the lender's saying, well, I don't have documents from the buyer, X, Y, and Z is missing. And I said, but we're having this conversation now. So I reached out to my buyer, and my buyer said everything was submitted. They have an email trail. I got copied in on it. Well, the lender just wasn't communicating. It actually was sent. Somebody on the team didn't do that portion of the job. And consequently, 3 days later, we didn't close. And it's exactly what happened to them. They were in boxes. They had to go find a hotel because their bed was in the truck. So this is what we try to avoid. This is why it's super important that we work together as a team, and you know who you're working with.
For sure.
And I guess the biggest shock to me was that, like we talked about earlier, it's not just you get approved, you don't get approved. It is how you structure that loan and what you know about that person. So if that client if you're just going online and putting your information into that website, they need more information than those little boxes.
Yeah.
And so when you get approval or not approval, you had a client with me that I was working with a builder, and that builder said, we're going to get him approved. And I was like, I don't think that's possible. We kind of spoke about that.
We spoke about that, yeah.
We spoke about it in advance, and you said, we need to do certain things that they're not going to be able to do. So we wrote the contract and said, if you can't get him approved, we don't throw him out. You have to try one of my lenders that will be able to help you because I knew you could do it. And they said, we don't do that, we don't do that, we don't do that, which is true. They will say they don't do that. That customer did not get approved because of the type of job he had with his actual improvement in his job, and it actually failed to get approved. And you found out a way to make that structured, get him approved. He is the happiest man on the planet right now.
So happy.
He is like, he has literally called me every 2 weeks, be like, I'm loving my house, I'm loving everything. And it would not have been possible if he just filled out that website, just spoke to the one guy and went, no, I got to wait another year. He wouldn't have got that house, and not for that price and not for these rates. Like, everything's changing. It's all fluid, right? So you know how to make it happen now, you know?
Yeah, and there's a lot of gray in underwriting, right? Whenever the underwriter, by the way, is the person who makes the decision and stamps as yes or no, right? And so, like you said, if you just answer yes or no, that's black and white. But the guidelines are not black and white. There's a lot of gray area that are up to consideration for the underwriter. You could have some compensating factor if the client has a little bit more reserves, or if we're able to get the credit score from a 638 to a 641. Like, some little tiny changes sometimes that make the difference between an approval and a denial. And when it's really who you know. On the underwriting side and on the lender side is who you know more than what you know, guideline-wise. And a lot of builders are unfortunately stuck with using a specific lender on their side. But if you're looking to buy a new build and you're getting declined by them, we've been working with a couple of clients that got declined, and now they actually own their house. It's been very cool to see, very fulfilling for us and the team, because they're like, oh my God, 2 other lenders declined them, and now we're the reason why they get to go in their house.
Yeah.
And they look back at that in 5 years and be like, hey, that person would never have had their home. They would not have built that net worth that they have now because the home continued to appreciate over time. So
and they're going to continue to pay rent to give someone else that income.
Yes.
So they're basically paying a house that they're not getting anything out of. So the faster we get them into a house where that's going into their own equity is amazing, you know.
Which kind of leads us to our next topic. Is it a good time to buy? That question comes up often in our world, right? So what's the market like? Is it a good time to buy? So I think I'll turn that over to you, and we can chat a little bit about that.
For sure.
If you just got declined by trying to buy a house by a lender, this information right here might be for you.
The amount of leverage you have right now as a buyer is absolutely incredible. You have to listen to this.
So what would you say right now is, if you were a buyer and you're out there in the market, what would you say is your biggest leverage piece that you could?
Leverages. There's a lot of them. So I'm comparing to like 2 or 3 years ago even, where we couldn't get any repairs done. The appraisal would come in short, and the sellers were not budging because they had 4 or 5 other offers behind.
Or more.
Or more.
Yeah. Or more.
Yeah. And where you would have competition on the cash side, like you'd have cash buyers paying over the appraised value. And so whenever you were trying to buy the home you wanted, you couldn't. And so right now, leverages wise, we have a lot of different things. We have repairs. So a lot of sellers are budging on repairs, which is very helpful. You guys have seen that, right? Appraisal, like we just had an appraisal that came in $34,000 lower, and the seller snapped and said, okay, they bridged the gap, and now the client's monthly payments are $200 a month cheaper.
That's awesome.
So that's pretty incredible.
That did not happen 3 or 4 years ago. I remember we would put a listing up on Thursday and prepare for an open house on Saturday, and we couldn't ever get to Saturdays. Because we would have, if it was priced anyway, actually, I will say that, the inventory was so low, and many people were migrating down to Florida, that we would just put a property up and people were coming out of the woodworks to purchase them. And that is a different scenario today because we have more inventory, right? So now the builders have caught up. There's a lot more inventory out there. There's a lot more people wanting to sell. So we're seeing higher days on market. And basically from our world, higher days on market means that we, as buyers, when we're working with our buyers, these conversations become much easier than they did before, because before we would write sometimes 5, 6 offers. Because if they weren't strong buyers, like for example, if you were buying FHA at the time, and you're going into a competition with 8 or 12 other people, unfortunately, they unless they were way above, they weren't winning. So it was cash all day. We were getting cash done all day. I had one particular listing where someone paid, this was insane, $100,000 over ask, because it was just acreage with a gorgeous home. It was like a modern farmhouse, and that was their forever home. And I said, "Do you understand? You're not going to get your equity out anytime soon." He said, "That's fine. It's my forever home." He was good with it. those
But
are
what
not,
you just said is 100%. You're not going to get your equity out anytime soon.
Mhm.
The whole concept of any time to buy, the longer you wait, it's going to turn around. And just go back in history and look at our parents and our grandparents bought homes. And what were the rates back when our parents bought a home?
They were like in the 17s, 18s.
Yeah.
And we're like, oh no, we're going to wait for the rate to come down. I mean,
Yeah.
we're not going to get that COVID rate again. If we do, it's a bad thing. And that means the home prices that went through the roof. So,
Yeah.
we're still in a good shape.
Yeah, and I was gonna say, like in 2015, I remember I was new to the business when I came in, and there would be some investors who would be purchasing homes at 5.5%, 6.5%. I'd be like, these guys are crazy. Like they're paying so much interest, and they continue to buy and buy and buy. And of course, their net worth portfolio keeps climbing, and I just don't understand. So at the end of the day, it's having clarity on the numbers, making sure you feel comfortable with the monthly budget, because that's really all that matters at the end of the day. And also making sure if that's on the investment side that you cash flow enough per door, right? So
Yeah, because you want, ideally, right, we want to be covering the expenses, meeting your tax, your insurance, your payments. You have to have a little bit left over because there's the unforeseen that could have happened. And so you have to make sure that you have enough in that investment that it's, one, going to pay for itself, and two, there's money there for anything that may pop up. So what are you seeing right now as far as an investment standpoint? Because you're looking for an investment property, right?
Yeah,
And so are we. We're out. This is the time, guys. So if you've been sitting there thinking, is this the right time? Should we? Shouldn't we? It really is. And here's why: because prices are pretty stable. People are saying rates are a little bit higher. You know what? They're not really that high. They're higher than COVID, but that wasn't a real rate.
correct.
Right? So
that was not normal.
people are maybe waiting for that to come back. It's not a real rate. It's not going to come back, I don't think.
Yeah.
So this is the
We
time.
hope not.
We
Not for what happened to make the rate go that low.
Yeah.
Yeah.
So this is a great opportunity, as we were talking about, as a buyer, because with more inventory, we get to go out there and, one, have more inventory to review, but two, we get to negotiate. And that's what we're here to do, is to help you get the most bang for your buck as a team. And Charles's job is to tell us, like, where we stand. Is this a good financial decision for us? Because everybody is different. Everybody has different commitments in life, right? Do you paying child support? Do you have a lot of commitment in your business? So it's different for everybody. But the one thing I can tell you for sure is, wherever you're not investing, somebody else is, and taking up those opportunities that could be for us. So we're actively looking. In fact, yesterday I was out looking. Day before I was out looking. Charles has been looking. Tell me, what do you like to invest in?
Yes, great question. And by the way, if you don't believe what we're saying, at least believe what we're doing. Like if we're looking to invest ourselves, then if you don't believe everything we're just saying, then I guess just mimic what we're doing, because we're continuing to buy homes. So, what we're looking for right now is we're more of a long-term holders, Chelsea and I, and we want multi-units. So we've been looking mainly into duplexes and triplexes, or a single family with a mother-in-law suite. So we have some type of opportunity for rental on the front and the back. And it's been doing great for us. We look in specific areas because we want to be close to the property, so we can continue to do a few drive-bys. Maintenance is easier. We have all our main people, maintenance-wise, that we trust. So we've been looking mainly Lakeland duplexes, and I tell Daniela and Justino all the time, like, hey, if you find one, let me know, because that's what I'm looking to purchase.
There's actually a couple good ones in Lakeland I saw.
So we need to talk a little bit about this
talk about
off
that.
camera, because I don't want you guys to steal the deals. Don't be stealing the deals now.
Yeah, but I think it's just, once you kind of get it on your radar and you really get zoned in. So there's a couple steps that need to be done before that, by the way, right? So you want to, before you find your property, and then you have to go back and say, how do I buy this? And now you may lose a great opportunity, because investors are out there trolling every single day looking for these opportunities, and some of them are cash. So that doesn't mean you still wouldn't be in the running, but it means that time is of the essence. So being able to be ready to buy when you find that property. If you're deciding that you're going to put that property in an LLC, you want to make sure that that's already in motion as well, if that's how you're purchasing.
That's a good point.
Depending on how you're structuring it. But it kind of starts once again with conversation, right? So reaching out, having conversations with us, dialogue about what your vision is, what you're looking for, so that we can start to keep our eyes open. But then the next step is talking to Charles, so that he can prep you and tell you what you should be doing.
Yeah, that's a good point. A lot of people decide, hey, I'm not going to talk to Charles or anybody on his team just yet because we're not ready.
Yeah,
We're
or till
not
I
ready.
find it.
Until I find it,
Yeah.
yeah. Like, I'm not ready. It might be in the
Yeah.
next 6 months. It might be in the next 12 months. Well, the crazy part is, let's say we look at everything and it looks spick and span. Everything is super easy. Then great. Now you have green light to, if we need to pull trigger really quickly and you find the house and you put an offer in right away, you can literally make one phone call and you have that person on the other side. Yeah, I'm sending it over to you in 5 minutes. So you don't lose any time. But if it's the first time we're discussing and we need to get some documentation, and then you have to find your tax return from 2023, you're like, where the heck is that? It takes some time to go through that. And if there are some issues or some credit repair that can be done, that can be the difference between you cash flowing $400 a month or you cash flowing $470 a month because the credit score is a little bit higher. Those are all conversations we need to have ahead of time. Like, we can't just make a decision on the spot, right? So
Yeah.
For sure.
Yeah, those are all valid points. And I think it's just stuff people, one, you don't know what you don't know. And two, if no one has these conversations and you don't educate people, and things change all the time, by the way. Nothing is cookie cutter. There's always new programs coming in. There's new things that change. Just the difference between investing like an Airbnb platform versus,
yeah.
a flip versus something that you're going to hold long term. There's all different ways. So it's not just one size fits all.
Yeah, I was gonna say, what do you guys think about Airbnb versus long-term rental? Like, do you have a preference? Like, what are your thoughts on that?
I like the long-term rental just because it's not so chaos. I know that there could be potentially
For
more
sure.
money in the Airbnb, but I like the stability of the long-term rental. What's your thoughts?
Well, I think it depends. It's area specific. What I'm starting to see right now, a little bit of a slowdown in that Airbnb world, because especially on the bigger homes. So if we're talking about anything between 6 and 8 bedrooms up to about 11 bedrooms, those highly themed projects up in the Orlando area, Reunion, Championsgate, that little hub, we do a lot of properties out there. And what we're starting to see is a lot more is coming on market. So not good or bad, because it depends on what your long-term
For sure.
investment is. So if you're thinking about purchasing that and getting it at a good price now would be a great time.
For sure.
And then your vision has to be a little bit further out. So you want to be able to be in the position to hold it longer, because yes, that's going to be a higher return, but you're going to have times where we have seasonality here in Florida, right? So
For sure.
so we have peaks. So our summer things surge. We sell a lot of real estate. I guess we're kind of lucky because and then even wintertime, we have like the snowbirds coming down and
Yeah.
there's still momentum. There's like little pockets, maybe like October, November, I see a little slowdown with me. So I guess it depends on your temperament. So if you want a quick return on investment, or do you want a long term investment? And that's how I don't think that anyone is good or bad. I think they're different. And I think if you want an easier investment, go for the long term. Because once you vet your renters and you get them in there, and it's pretty much plug and play, as long as you have a good solid property that you can see is not going to give you a bunch of heartburn, which some
that's
of
a
them
good point.
might, but for the most part, that's going to be a little bit easier. But the short-term rental, like I said, really lucrative. Just depends on what you're looking to do.
Yeah. And just to kind of piggyback off of that, I feel like the short-term rental is higher cost
Yes,
to maintain
turnaround.
the turnaround.
Yeah.
You have to always have someone coming out to clean.
Yeah.
And then, like you said, that you have ebbs and flow. Like, it kind of goes up and down depending on the season. I feel like you need to have a little bit more money set aside because of those
slow points.
fluctuations. Like, because you could have a couple months where the numbers are a lot lower, and now you still have your mortgage to make your payments on. We have a structure, Chelsea and I, on one of our duplexes, and the only reason why we set it up that way is because it just made more sense for us. So we have one side of the duplex that's long-term rental. So we kind of did a hybrid, and the other side is an Airbnb.
Okay.
And the reason why we did Airbnb on the other side is because we needed a spot. My parents are originally from Quebec City, up in Canada.
Oh, that's perfect, because then your parents can stay there.
Exactly. So then we can kind of freeze it 2 to 3 months out of the year, right? So then they get to stay down here, and they don't use the excuse of, hey, we can't come see you because it's too expensive. Guess what? It's paid for.
Yeah.
And then the other 9 other months of the year, then we just do the short-term rental, which kind of helps offset the fact that I didn't rent it out for 2 or 3 months, right?
Yeah, and that's a perfect little match. However you want to put that. And I think that also, depending on the area you're in, right? Because
For sure.
Airbnb has some pockets that really thrive. Lakeland is big city, right? So there's going to be people that want to be here. But if you're like in a little small town maybe that's not going to be as appealing as doing a long term. It just depends on your area.
For sure.
Another thing to talk about with doing the short-term rental as a homeowner, I'm sure you found this too a little bit. Well, maybe not because it's your parents, but people who are renting those types of homes are here to have fun. They're on vacation, they're with their families, they're in party mode, or they have a lot of children who tend to have different sets of rules for a vacation home than their own home. So what you see is that there's more maintenance involved, not just the turnover maintenance, but there's also more
repairs.
painting,
Yeah.
A lot more repairs,
repairs.
yeah.
There's been many times I've walked in and seen like crayons all over walls and all kinds of fun stuff. But again, if you can kind of look at that investment and say, you know what, but this is how much we can get for that. And who cares if we just paint it a little bit?
Yeah.
That's okay. So it really depends from person to person, I think. So I don't think there's any right or wrong answer. I think the wrong answer is do nothing.
That's true. Yeah, that's a good point.
Yeah.
And for those of you who don't get along with your in-laws, you can just flip it the other way and say, no, it's fully booked. You can't come down.
That's a good point.
Yeah.
Did you know if you are getting ready to buy a house, if you do certain things in the wrong order, it's going to seriously decrease your chance of closing and getting those keys. So we're going to find out right now what the process is to actually make sure that you get a successful closing day and that you can move into your home as fast and comfortable as possible. Let's check it out. What is the process that we're actually going to do with a new client that may feel that their credit's not ready to buy, so they want to sit back and wait until their credit is to a certain score or a certain level that they feel comfortable they can move forward? What is that process like, and what are the steps they need to take to make that happen?
That's a good point. So that reminds me a lot of whenever people are setting like New Year resolution, right, and they don't actually write it down. Same thing with the credit repair. If they say, hey, I'm just going to continue to work on my credit, I don't want you to review it and give me a game plan, then we don't have anything that we can actually write down and say, hey, step one, we got to do this. Step two, we got to do this. So a lot of people end up printing the game plans that we send over to them. They're like, okay, yeah, that's right. Charles told me to pay off my Capital One first, then my Discover, then I need to reach out to this specific person to go ahead and get that one collection removed.
There's a better sequence to do, not just randomly throw stuff at the wall, right?
For sure. So number one, I would say paying down credit cards is the number one. Number two is settling or paying off medical bills, because those can be completely wiped off like they never existed.
Okay.
And then step number three usually is a lot of like collections that can potentially be disputed. There's specific rules in the state of Florida that whenever they charge you above a specific APR level, they're essentially breaking the law. And so they're not allowed to actually show it as a collection, even though it's affecting you. So there's a few of those that can also be removed. There's specific companies that we know of that do that are very, very well known for that. And those can be removed easily. So can you imagine if 1 or 2 months later, we have 2 credit cards paid down, 1 medical bill removed, and 1 charge off removed? The score can go from a 560 up to a 650, 660 within a 2-month period. It happens really fast.
What is the situation? Should they be closing those accounts down completely and getting rid of that card completely, or just paying it down?
So there's a big misconception there too, because if you pay it down and then shut it down, all your credit history is gone. Essentially, you had a credit card that you had open for 64 months, and now you're closing it out. That's going to be detrimental to your credit score. So that's the first thing. And second piece, a lot of people think they need to keep a balance of like 30% or 10% or whatever, but really all you need to do is pay it down to zero, and then keep it at a $0 balance. And I've been sold to keep a 10% balance or 30% balance to get a better score. But the absolute best score is whenever you have a $0 credit account, you maybe just use it for gas and stuff. Keep it very simple, pay it off every month. Don't let the credit card wins, is what I always say. Like, you want to win the game of you getting a few extra points, and then you don't pay any interest, and you keep the balance as low as you can every month.
When you're trying to build your credit and I'm going to spend $100 today at a location and I have $100 in my pocket, is it better to use my card and then pay that off immediately when I go home to show that it went through there, or it's just better to use the cash?
I think using the card is fine, and I just try to pay it off every single month. If you have cash on hand, obviously that's ideal, especially if you're in the middle of purchasing a home. I would rather use the cash during that transaction.
So don't buy a new BMW before I close on my house?
It's crazy that you would say that, because I have some clients doing that. Believe it or not, I'm like, oh my God.
Or they
like,
went and furnished their whole house.
So if you don't know this right now, if you are about to buy a house, do not finance anything. Do not open a new credit card. What are the rules there for that? Because people really don't know, and they're about to go furnish a house. They need a new car for their new 3-car garage, and what happens?
Yeah, until 24 hours after you've bought the home, you are not allowed to go anywhere. Like some people end up going and getting like a Badcock $2,000 cushion, furniture, and then we end up having to disqualify them because now we have to say, hey, hold on, they just got something the day of closing, because we look literally the day of closing to make sure that you don't have any new debts. And then obviously causes issues from a debt to income ratio standpoint. We have to repull credit because now you have new debt. Scores could have gone down. And if you were on the verge of approving with a 640 and now we're down to a 635 because of that, we could lose approval. So you have to be very, very careful.
And it may not just be that, oh, they're not approved to buy that house and that item, that couch. It could just be the fact that don't buy the couch first, because it's going to mess up that entire process.
For sure.
Yeah.
For sure. If you had the choice between like, hey, I'm trying to buy a home, but then I have my old beat up car and I'm thinking of financing a new car, buy the house first and then finance the car.
Always buy the house
People
first.
always do it reverse, and then it's easier to finance a car than it is to finance a home. So start with the harder part, which is financing the house, and then flip-flop that to buying a car afterwards.
Yeah, I think a lot of people just don't know. Like they just assumed I'm approved, I'm good. I had a client, we were under contracts just before we started working together, and he had needed a new truck for his business.
Wow.
But we were under contract, and he really didn't share with his wife that he went out and bought a truck. And so he kind of just casually...
He slept on the couch that night, I bet.
Yeah, he casually mentioned it to his wife, like, oh yeah, I have to go buy the truck. And she said, what? And they called me to inform me they weren't able to buy the house. And it was 2 years before they could buy the house. So I thought she was going to kill him.
Yeah, no, I mean.
So yeah, so always check. And maybe you can buy small things, right? But the key to get back to communication is just check in with the lender and at least check in with the realtor and say, you know, where are we at? Is this an opportunity for us to go buy a fridge? And I tell people, just go ahead and find what you want.
Yep.
Put it on hold 24 hours after you close. You can do whatever you want, basically, but not before. Don't buy anything unless it's cash. And even then, check with the lender because they may be counting that cash as part of the pre-approvals.
And you mentioned something just a second ago about when we work together. I want to clarify, we don't work together. We don't work under the same corporation.
We choose to.
We choose to work together. It's kind of like going to a doctor to help you out that you really, really like. We like working with you, and we were referred your information from one of our past clients. That's how we got connected. So the whole point here is we're advising you to get great information because, you know, I just said a doctor, but you're like a doctor. You're like financial surgery to go into your biggest asset and not make mistakes, because those mistakes can last a very, very long time if you don't get the right advice up front. Sure. And that's why we keep coming back to you, because you give our clients really, really good advice. And there's not one client we've had that have been like, oh, why'd you give me him? They're always like, oh, he was the best guy we've ever worked with.
Yeah, and your videos, when you do your little videos, people love that. So Charles does these touch points where he keeps people engaged. He lets them know where they are in the process. And he does the same for us, by the way, which I love, because I don't need to spend my day checking on what file is where and what's happening. One, it's not productive for me, and it's definitely not productive for you, for me to keep calling you, bothering you. So those little touch points just takes the pressure off. I know where we're at, and I know if there's an issue, you're calling me, and you're calling me before things are bad, so that we have time to fix them. So that's, you know, people do business differently. Like, and what sets you aside is that you go the extra mile, and we like to believe we do with what we do. So I think it's good alignment.
Yeah, I remember they've been hyping me up the whole time, so I'm going to hype you guys up. I remember the very first time. True. So we helped on the financing of one of Daniela's listings, and that's kind of how we connected originally. And she was like, oh, I kind of like you're giving me updates weekly on how things are going.
Normally I have to beg for updates.
Yeah, literally. And so I remember then I went to an open house with Daniela, and I was incredibly impressed with how professional she was. And I remember driving back, I was on the phone with Chelsea, my wife, and I was like, hey, I have to work with them. They're like a perfect extension of us. They are professional. They are very knowledgeable. And, you know, you have realtors that you work with that it's like the cousin of, you know, an extended cousin. You're like, oh yeah, I'll just encourage the family. But they may have only done one transaction, right? And so they've only seen one specific scenario. Daniela and Justino as a team, they've seen like hundreds of scenarios that can go wrong and how to fix them. And so you need someone on your side that knows how to fix them, knows how to guide you, knows how to not put pressure. Like you guys will say, hey, this is not a good time to buy, or this is not a specific property that's worth pursuing. Like we talked about that investment
Yeah.
property, right? Talk to
Yeah.
us a little bit about
So
why you thought that was not the right.
Yeah, I didn't think it was a good fit for us, but again, maybe someone else would feel differently, but for us, it wasn't. So you don't want to go into a neighborhood where you see tons of for sale signs, tons of for rent signs, and then go buy in that neighborhood. It doesn't make sense. You know, at the end of the day, if you're purchasing it as a business, first, as you know, the numbers have to run. If the numbers don't run, you know, we can't get emotional about this. I tend to get emotional because he kind of course corrects me all the time. He's like, "You like it because it's gray." I'm like, "No."
Everything in the house has to be great.
I'm like, "Yes and no." I'm still looking at the numbers. So just great community, by the way. It checked a lot of the boxes, right? So we want to be in a great area, something that's a little bit more established. Obviously, if it's gated, that's a big appeal. Amenities, like so, this particular community had tennis courts, it has a golf course, a pool, all that. So it checks all those boxes, and had been on the market just enough time for the seller to be in a position to want to have more dialogue about a better price. So all those boxes were checked. The house looks great. I get there, and as I'm driving, and again, due diligence, right? So just seeing it online and go click, yeah, we'll buy that. You know, sometimes you're really lucky and it works. If you have a great realtor, that person is going to be your eyes and ears if you're not there. And hopefully they're going to be really transparent about that. Hey, I see this, I see that. I've talked myself out of a lot of deals. Doesn't mean I've lost the client. It just means I've talked myself out of the deal that they thought they wanted. Because I'm looking at things differently. So when I went there yesterday, that's what I saw. I saw a lot of people selling, a lot of rental and oversaturation. And I just knew that over time, it's just going to sit for a while, or we would have to chase it down and price it lower and lower and lower. Therefore, from an investment perspective, it wasn't going to be lucrative for us because I don't want to play that downfall game. The idea is that, we're growing, not having to chase the market down. So it wasn't a good fit. Great. It's still a great neighborhood. Again, inventory is sitting a little bit longer. So for the sellers out there, you need to be pricing accordingly or things will sit. There's just a lot of competition.
Have you ever seen a realtor actually selling you against buying a home? Check this out.
Yeah.
Right?
And when you're selling your
it's
home
true.
too, I mean, we are in a market right now that it is not the days of some realtor just got their license who takes a Polaroid, puts it up, and sells the house.
A Polaroid.
Yeah, Polaroid. I'm going way back.
Going way back.
They're making a comeback. Come on. But the reality is now, what are we having to do to get a client's home noticed? With the amount of inventory that's out there, we are having to spend 10 times more than we were before. And we were already outspending other realtors to try to make their house being seen on top. But it's a different market. So it's way more difficult to get in that world of 5,000 homes. Why is yours going to be in the first 2 or 3 top? So what are we doing differently right now to show that home too?
Yeah, well, I mean, it starts with marketing. So obviously, not taking your phone out and taking pictures yourself. Highly recommend making sure your realtor is not doing that. Hiring a professional, right? So we're professionals. Charles is a professional. Everybody has their niche. Everybody does their thing very well, hopefully. And you need to align yourself with that team. And so when you have great videographers, great content creators, media specialists, you are putting yourself at another level, which means that your client is going to be seen, their property is going to be seen at a higher level, right? So doing Matterport, doing 3D Matterport, doing Zillow tours. Sometimes people just try to take the cheap route and they just try to do things themselves. And again, nothing against anybody, but if you really want to be seen and you want your property exposed, it's a combination of things. It's pricing accordingly. That's huge. If you don't price accordingly, it can be the nicest property in the world. It will sit. We are not in that market like we were 3 or 4 years ago. But secondly, it's your marketing, right? And we market because we're with Keller Williams. We have a broad network of people. So we're not just networking and marketing here internally, like our little spot of Lakeland. We belong to the Keller Luxury division. And so we have access to all the international KW luxury, because sometimes we have people that are maybe Canadian or, France, whatever.
Those Canadians got to watch, you know.
They're the nice people. They're the nice ones. We want them to come.
Why is there no
here.
poutine here when we're eating?
Yeah.
Come on.
Yeah, that sounds good.
Yeah,
so
put that at the open house.
There you go. Get a lot of people. Poutine it up. You know,
Like,
next
we got
open house
6
for sure.
offers. Like, oh, whoa, is that the poutine?
Free
Yeah,
poutine.
we ate a
should've
lot of
known.
that just now when we were up in Canada. A lot.
Yeah,
Not
yeah.
more than we needed to, which is like
It's
part
not
of
good
the-
on the belly. Yeah.
part of the
Tastes good, though.
the stock.
Yeah.
But yeah, I think what we do different is that we are aggressive in a nice way. I think we're aggressive in making sure that the properties get seen. We're aggressive about making sure once it goes under contract. So when we put it under contract, we're really vetting that person who's bringing us an offer if it's not our buyer, to make sure that they're really qualified and that there's no surprises. You know, are they contingent upon another sale? Is there anything going on in their world that we may have to wait on? Because what we don't want to do is put our seller in a position to where we've asked them to relocate, box everything up, find their new home, or maybe put a deposit down on the next place. And then we have to call and say, oh, by the way, you know, maybe their lender didn't do a great job of vetting and now they come up with a few hurdles. And so I think that's really what we do differently is we just spend a lot more time diving in and making sure people are really qualified to buy the property besides the marketing piece. We also market a lot to other realtors. You know, we're not saying that we're going to bring
Exactly.
you the buyer. It's a good chance we
A huge
may or
portion.
may not bring you the buyer, especially with luxury properties because it's a niche buyer for the bigger properties. And so we shoot out content to other realtors. We do a lot of blasts out. And again, with the luxury portal, we can get that exposure because we may not bring you the buyer. But then again, we would love to.
You have to ask the right questions because even on our open houses, someone's coming in to look at a house that we're selling for a client. But the buyer that walked in to see it, we're asking them questions because they may have a house to sell first. Can they move right away?
Yeah.
And how many times in the middle of an open house we've actually said, call Charles, because before we can even help you buy this house, you may have 2 or 3 other things that have to be done before we can even talk about this thing.
Yeah.
And then we end up finding out, oh yeah, we need to do this, 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 this. And now we've actually helped 2 clients at the same time because we asked questions that other realtors didn't ask. They were just there to show the house.
Yeah.
So it made 2 clients happy and, you know, it was a win for everybody. But if we don't ask the right questions, we're going to get and find out that was not the right way to go.
And that's exactly right because actually Cora, who I sent you the other day, I don't know if you talked
I
to
don't
her
think you
yet.
can say that online, but
It's just a first name. An example of not going deeper with your questions, and I'm sure you do the same when you're vetting your buyers as well, is that somebody that I do business with, right, in my world, so we kind of exchange services. She has a realtor, by the way. And she was telling me, like, I'm not really sure. You know, the realtor keeps sending things to her, but she's not sure what that looks like. So I just finally said to her, so what is really the problem? Because I've been coming to you for 4 months, and this has been the conversation for 4 months. So where are you stuck? And she just said, I don't know what's next. I don't know where to start. And I just was kind of sitting there thinking, the realtor was so busy sending properties
Because they didn't actually start
they
the process.
didn't ask the questions.
Yeah.
Her problem isn't that she doesn't want to do it. She doesn't know how to do it.
so great segue.
So-
What is the steps that they need to take?
Yeah, I mean, first thing is obviously calling us. And going back real quick to what you were saying, like, I feel like the network, especially on the luxury side for properties on the higher price point, like, of course, a property listed at $225 is going to go like this because there's a lot of people in that price point. But if you're listing a house for $600,000, $700,000, $800,000, $1 million, like, not only do you need a realtor who knows how to do marketing, but you need a realtor who knows a lot of people. Right? And not necessarily like just in Florida, like you were mentioning with the luxury network, it's such a big deal. Like having someone from Colorado who's selling their home, looking for a luxury home down here in Florida, like you need to have those connections. A guy from Canada who's an investor in tech who decides to buy down here close to Orlando. Like those connections don't make themselves. Like some of those guys are not on Zillow and they don't go on Realtor.com. So you need someone who actually can connect the dots and make that connection and allow you to move forward with the property. And so it's easier to sell when you have the connections you guys have.
And Keller Williams is great too by putting us in a network where if you're in Colorado, we're licensed in Florida. So we can't sell out of the state of Florida or help, but we are so well connected in that network that we can go through and kind of say, that isn't the right guy for you, but here's 5 that's in a network in your area that's going to be help. You've connected a lot of people with people out of state and been like, use this guy. He's
Yeah.
highly rated or girl, whatever.
Well, and also people like we do a lot of conferences. So we, education for us is a big piece. So we have Mega Camp, we have Family Reunion, we had the Luxury Symposium, which is happening this fall. And so those are learning platforms that we go to stay ahead of the market, really learn what's coming, and tech. However, the flip side of that is building that network of referrals. And so, for example, as you were saying, a big luxury hub of people in Colorado, in Hawaii, even like there's all around these little pockets that we dive into. And when we see each other at the conferences and we're building really strong relationships, who do you think they're going to take care of? You don't think they're going to take care of your client like their own, because you now have, you're not just a referral via email. Here you go, I'll give you this referral. You're a person. You know how I do business. And I expect if I give this to you, this person who's in my circle, that you're going to treat them the same way. In turn, I will do the same for you. So it's not just the referral to referral, it's a relationship to relationship that we get to build by going to these conferences as well. So there's a lot of cost involved to stay, up to date on all of that, but it's worth it. And that's what ultimately how we try to set ourselves apart. Right?
Yep, absolutely.
It's just constant all the time.
Relationship. I haven't heard a lot of realtors talk that way. So
Yeah,
that's pretty incredible.
because it's
And
not
education.
about the transaction.
Education too.
This is not something where we took a test and it stays where it is. It is fluent. The economy, turn the news every day. The economy is changing, tariffs, all these things. We need to stay ahead of the game. So we are spending money to go to these big conferences where we have 300 people learning the statistics and learning the economy and learning where the market's going so that we can have those answers when that actually happens. Rather than waiting for a major website that you probably go to every day to go, oh, this just happened. Well, it's too late. Now you're already in it. You should have known before it was coming.
Yeah, then you become reactive instead of
instead of
proactive.
proactive.
So we want to be proactive. We don't want to be reactive, so that we already have, like you said, you call me with the resolution. We want to be, for our clients, we're coming to you with a resolution. By the way, these could be things that we're going to talk about now. They may not be a problem at all, but if you're really honest and transparent in the beginning of that transaction, then they're calmer. But I think the worst thing anybody can do is just like do the pop-up, and not really educate your people. For me, at least, it's never been about the transaction. Yeah, the transaction has to be done as well as it can be done. It's about the relationship that comes from the transaction, right? So, and I always tell you, I was like, well, these are good clients of mine. I worked with them several times. They've referred me a lot of people. But everybody is, to me, when we start working together, I treat them the same way. Like, this is our relationship we're building. And this is not meant to be just this transaction. It's meant to be our relationship over time, because your kids may grow up and need to buy or sell, or your friends. Or oftentimes my phone is ringing for like, who's a good plumber? Who's a good best person to build on this extension? And we offer all these services because we want, and we update those lists every year, because sometimes, people we refer, we want to make sure they're doing as good of a job as we thought they did.
Yeah.
So
It's
that
actually on our website now. We now have a link on our website that will give you all these great referral companies based on one thing. They've all been referred to us by somebody who has personally used them, if not ourselves, that have said, use these. We can go online and look at great restaurants, but when you have a friend that went, you got to go here. You already know you're going to a place that's going to be fantastic. So we're redesigning that entire thing right now, and we have a ton of information that came in, and it's great because now I can say, oh, you're looking for a roofer, you're looking for this, you're looking for a lender. We know someone who's going to take really good care of those people. So it's important to be networked and know these people and have people that actually vouched for them.
Yeah, I think there's something to be said for like detail, right? Detail. I think if everybody is doing their part extremely well, then it all becomes easy. But I think while ever we're working with mismatched people, everything
details
is
get missed.
hard. Details get mixed, miscommunication. So I'm a big advocate of find your people. Your people will also find you. And do right by them, do right by the client, and it all works out.
And there's a lot of major websites out there that have great tools and great information. I mean, you got Zillow, Redfin, and Realtor.com and Homes.com. They give you all this information, how much this and how your rates and all this stuff. But the reality is there's not usually a person directly behind that website that's talking to you to find out what your specific individual situation is. And all those websites are also making their money off of ads. They're making money off you going there. So these headlines and these click here to find out stuff usually is not 100% accurate. It's in the ballpark in some cases, but the reality is they want you to stay there so they can make money. I mean, a friend of mine is from a news station and he goes nuts about how much misinformation there is on the local hurricane coming. Like, it's not even in 90%, it's about staying tuned and clicking those things so they can make money. And he's actually just the opposite. He's like, no, it's not even coming close to Florida.
So we call him.
Yeah, we call him.
You know,
Literally,
call him,
I'm
like,
like, literally, I
for
call
real?
him Bay News 9. I'm like, hey, what's going on? He's like, no, you're fine.
Or pack up, go.
Yeah, and it's really scary not to have somebody. And I guess with the group that we surround ourselves with, including the people in this room right now, we're all family people. We all have kids. We are not run by some multi-billion-dollar corporation that are pulling the strings going, don't do that, don't give them that information. We're here to help people, and because we were all consumers before this.
Well, we still are.
We are, yeah, we still are.
We still are. And,
So,
and we appreciate sometimes, even I'm sure you've happened to you, you've gone through a drive-through, get a cup of coffee or Starbucks or whatever, and there's like somebody exceptional at the window. And sometimes I'll turn to him and be like, wow, she was amazing. Yeah. And all she really did was give me my coffee, but she was very nice. She was very polite. She was very pleasant.
She asked if we needed anything else. Like,
You went into details.
And it wasn't like,
right?
Here's your coffee. See you later. You know, it was like pleasant. It was a nice experience. And so that, I think we seek that out in businesses, right? Which is why, again, and I know you do, right? You and your team, you strive to do all of those things we've just been talking about. So I guess the top and bottom of this is like, if you're not sure what to do, you don't know where to start, Charles is your guy.
Yeah.
Personal connections.
Give us a call. We're happy to connect you. You know, it may not even be a today plan, but if it's on your plan, if it's in your radar and it's something you want to make happen, then we have to start with a conversation. That's number one. It's a conversation. We need to understand where you're at so we know where to meet you, and then where you want to go so we know how to help you.
What is the number one mistake that homeowners make without knowing they're making it and then pay for it later?
Yes. If we want to get tactical from an interest rate standpoint, is they first ask for, hey, what's the interest rate? That's the first thing they always ask. And obviously the interest rate works based on different risk thresholds, the type of loan, the type of property, your credit score. Is it a fixed rate and an adjustable? How much money are you putting down? So there's a lot of different things that fall into that. So even if we don't pull credit, right, and you're like, hey, what's your rate? Well, hold on. I'm not going to pull your credit, but I need to find out all those 27 variables. And then once I have that, then I can tell you, okay, based on what you're telling me with the property you'd be purchasing and the price point you're looking at with 5% down with this credit score, we're looking at this interest rate.
So you're telling me that the property that's 40 years old and has 27 acres might be a different interest rate than if they went with a different brand new home or a different structure?
Yeah.
And so it's not an easy answer.
And it also depends on the location. Like we have some specific, essentially outlets that we have that allows us to have a better pricing in specific pockets of Orlando, in Kissimmee, and Davenport, in Auburndale. There's a lot of really cool spots where you're like, oh my God, let me run the numbers on this home. And the next thing you know, the rate is 0.3% better. Right? So you have to be careful. You have to ask a lot of questions, even if that means, so people think we need to pull credit up front every single time. No, we can give you a lot of knowledge.
So if I give you my name and my phone number, you're not going to be able to pull my credit?
Correct.
I have that question all the time. I don't want to give you my address, my phone number, because you're going to pull my credit. It doesn't work that way.
It's out there anyway. It's out there anyway.
Yeah, but it's a different process completely. What about the different types of loan structures? Maybe people don't realize that it's not just approved and not approved. How does that work?
We can talk about that for a while. There's a lot of different programs. The four main ones a lot of banks will advertise are FHA, conventional, VA, and USDA. Those are like the four main ones. But within those programs, there's different structures, different down payments. We had a client the other day that, I think it was actually the client we work with on that builder, where we couldn't get an approval with a 30-year loan, and we ended up doing a 25-year loan. And for some reason, the underwriting findings allowed us to get an approval with a 25-year loan. So that was great because his payments were barely higher. It's a better loan structure for him anyway. He's paying less interest, and we maintain approval. and he didn't have to put more money down on the house. So even the term of how long the mortgage is can adjust the approval of that specific loan. So that's a big piece that other lenders just don't, because they don't see thousands of scenarios. They don't know how to kind of wiggle our way around. There's also a lot of other programs that are called non-conforming or non-QM, which are becoming very, very popular, especially on the investor side of things, or if you're self-employed. Perfect example, an investor like Daniela and Justino, if they wanted to purchase a property, but obviously they have to file their taxes and they have a lot of expenses that they have to run through the business, might not work out for a standard conventional loan, right? A lot of self-employed borrowers have a lot of expenses, and next thing you know, we can't use as much income from a qualifying standpoint. But DSCR is one of those main programs that a lot of self-employed borrowers are looking for. And they do, essentially, what we do is we look at how much the mortgage payment is and how much the future rental payment of the house is going to be. So if they equal each other out, we're fine. Up to 75%. So if the rent that you can get on it is $750 and your mortgage is $1,000, we can still do it, which is obviously you wouldn't want to buy that house anyway.
Right. Not a good investment.
Yeah, it's not a good investment, but it does allow us to kind of get creative with it oftentimes. If you're a self-employed borrower, we can do 12 months of bank statements, which is a big deal. So instead of looking at your tax returns, that you have an incredible accountant, don't get me wrong, you showed $12,000 of profit, but from a bank statement standpoint, you may have $20,000 of deposit a month. So we're allowed to usually use between 50 to 75% of that $20,000 a month.
I think you did a couple of those for me already.
Yeah, on the bank statement, we have a no ratio loan, which means if, let's say, we're putting 25, 30% down on the house and the debt to income ratio doesn't work, we have a program for that as well. We don't even look at the DTI whatsoever. We don't look at your income, so it makes things easier for a lot of clients that have a little bit more funds available. We have a P&L only, like a profit and loss only, where we get in touch with the accountant, and instead of diving into the tax returns, like we've done that for a lot of self-employed borrowers who have a lot of businesses. They may have 3, 4, 5 different businesses, and it's getting convoluted. And I know if I go a conventional route, they're probably going to end up killing me because they're going to say like, oh my God, like you've asked me for like 20 documents for this business and I have 5 businesses, so now I need to do that for all of them, and it gets convoluted. So instead, let's just do a profit and loss statement or a bank statement loan. It's a lot easier, and the rate is 1/8 or 1/4% higher. But a lot of investors are willing to pay a little bit more on the rate so that they don't have to deal with all the nonsense of the paperwork on conventional financing.
Yeah, so it's not black and white.
No, there's a lot of gray there. And the only way to get through some of those is to get a couple different opinions, and always local. Never, ever work with some of the big banks that are national, because you're talking to someone on the other side that basically may have been there for 1 month, may have been there for a year, but they don't see as much volume as we do. Or they have so much volume coming in that they're not going to go the extra mile of saying like, hey, what else can I do to try to make it work? This is a family that Daniela and Justino sent us. I need to take care of them because we've worked together for so long, and I need to take care of the family. How can I do this? And then there will be nights, it's like 8:30 at night, and I'm like trying to relax with my family. I'm like, oh, but there's got to be a way to make this work. Right? But I can tell you the big banks don't do that. So that's the biggest
That's the difference
there.
between
sure.
personalized versus more commercial.
Yeah. Now, when it comes to things like FHA or VA, those structures right there, are they the same for all properties, or is there going to be a smaller kind of threshold and keyhole to get through? In other words, if you have a VA loan, is every property going to work for them when they're shopping properties?
Yeah, that's a good question. So VA has a lot of specific things, restrictions. The main things that they look for are obviously WDO, which is wood destroying organisms. Anything that has to do with wood decay, termites, peeling paint even on the side of the house needs to be pressure washed and repainted over.
Has to be habitable.
Habitable, yeah, for sure.
Good
VA is probably the strictest out of all of them, and then followed after that by FHA, and then conventional is the least strict of all of them. USDA is basically the same as FHA. They follow along.
Yeah, and those are important things for us to know, right? So depending on how you get approved, because if you are trying to do VA, which again has great benefits, and if you have the opportunity to use it, then it's a great program. But we can't be showing you specific homes that we know will not run under VA, because we're going to just hit a hurdle. Because unless the seller is willing to do those repairs, it's just not going to be fluid. So therefore, that's why it always starts with Charles,
Yeah.
because knowing how you're approved and how he has structured it. And then also he'll sometimes say, well, this is what it is, but also they have wiggle room for this, or they can also do that, because then we know we can show this many houses in that little pocket instead of let's just show you everything and hope for the best. Like,
And this isn't about, oh, don't show them that house because they're not going to get approved. We've got clients that are definitely approved for that house, but they've made a choice that they want to go with a certain loan structure
Yeah, they wanna
and
do.
don't want to put a certain amount of down payment down, which means they're going to go with an FHA loan, which means that that really nice property with the rusty roof and the shed in the back may not be the right one for them.
Correct.
And if they're just coming to us going, hey, let's go look for properties, I've got plenty of money, I'm going to get approved, no problem. We may be putting them on a home that's not going to work because that's not what they want to do. So there's a series of steps that we should be taking.
And you're saving your buyers a lot of money by doing that, because can you imagine, like, you go to a property that's 30 minutes away. You have to take time off of work. You go see the property. Next thing you know, oh, great, awesome, let's move forward. Put an offer in on the house. You put your escrow deposit for $1,000. You start paying for inspection for $400. Then you start paying for the appraisal for $650. You're $2,000 deep plus 1 day off of work. And then you're like, oh, by the way, this is FHA. We have an issue with the roof. Seller doesn't want to change the roof.
Yeah.
Now we spent all that money for no reason. So you're right. I mean, there's
ask the questions ahead of time. And I would rather take an extra 20, 30, 45 minutes getting those questions up front instead of just running to the house and opening the door, because now we're going to have so much better information and be able to help them in a much larger scale than if we just open doors and then they go, oh, well, we are going to use a loan structure that's not going to work. So ask the questions first, because it's going to save you time later.
Yeah, we're not here just to open doors, although people think that's what we do all day. Our job is really to make sure that everybody's aligned, right? So what you're saying you want is in alignment with what financially can happen, and then we start looking after that. A lot of people will do it in reverse. Well, I have another realtor that'll show us. I said, okay, no problem. Here's the nice thing, and you're the same. We get to choose who we work with, and we get to choose who we don't work with. And I think maybe realtors who haven't learned that yet, it's very eye-opening. When I first started, I had a very challenging file and a gentleman who was not very nice, and I kept powering through, and he kept saying, "Cut him loose, cut him loose." I'm like, no. But what I realized after I cut him loose, it was liberating. And then there was all these other amazing people that are there that we can help.
Not getting the attention they deserve from their people because we were working with people that we shouldn't have been working with.
Yeah. So if you're not willing to get your pre-approval first, or at least have a conversation with Charles first, or your lender first, then you shouldn't really be looking actively at houses.
For sure.
I think the number one thing there is what they don't want to do that process because it's time consuming. Oh, it's time consuming. I'm gonna have to take 20 minutes on the phone to answer these questions. Let's just go see the house first. That's what I want. But I don't think they realize that by not doing that, they're going to take maybe 3-4 times longer at the end to restart the entire process over because we didn't take that little initial step properly in the beginning to get that info.
And you may have looked at 4, 5, 6, 7 different properties that are now within the range. And you're like, oh my God, I'm not comfortable with those payments anyway. So they have zero clarity on payments or loan program. And they're looking at a property, they're dreaming, right? They're shopping with their eyes.
Yeah.
And it's funny because investors do the other way around. They don't shop with their eyes. They call us first. They call the lenders. They call their financial advisors first. And they talk numbers first. And they're like, okay, I know my structure. Then they go shop for the home. So they kind of do it reverse. So we challenge you to do that. Like shop like you're an investor or a financial advisor. Shop with your numbers first and then shop with your eyes, right? Kind of reverse that in that process.
Yeah. And then there's also surprises, right? Because we're approved for $350. Let's just call it that. Yeah. Great. There may be pockets and areas, where taxes are significantly higher. We are in a state where there's a lot of HOAs. There is CDDs in a lot of communities. And so we have to know, is that $350 all in? Like, do we need to make sure that everything is included in that? There's one condo right now in Reunion that I have a gentleman coming in for, and the monthly is like $1,200 just for the monthly for the condo. But then it's $15,000 to buy in, which he didn't know about. And then there's an additional $1,000 per month to actually use any of the amenities. So it's not just about the number, it's about knowing everything, all the expenses that are going to be incurred, right? And we don't know that until we have that conversation. If you just go to the unit, it's $350, we love it, we put an offer in, I didn't do my homework, Charles and I didn't communicate, nobody knows what's going on. Oh, we have to put $15,000 down just to be a member.
Yeah, that's a
Nobody
big deal.
wins, right? And you've wasted your time. Everybody has wasted their time. And the bigger picture, you're really disappointed. We've all just spun our wheels. So there's a sequence, and I know people don't always feel comfortable with that, but there's a reason we share this. It's because this is how it works smoother for everybody, and everybody
sure.
wins that way.
For sure.
And does the HOA and all those fees affect the loan?
Yeah, it's funny because I was talking to another client the other day, and I was like, hey, I know you're looking in that specific community, but you know that you can actually qualify for $50,000 more if you actually look into a community that doesn't have an HOA. And she was blown away by that. She was like, are you just trying to push me out of the community? I was like, no, it's just the monthly payment on this one here are literally $350 a month. So if we say, hey, let's go ahead and qualify you, we have to account for that $350 a month, right? And so if we take the $350 a month away, now next thing you know, your budget is a little bit higher in a community that doesn't have an HOA or that has an HOA for $80
More
a
affordable,
month or
exactly.
$100
Yeah.
a month. So
Yeah.
we can kind of play around with that too. So your pre-approval letter can be adjusted according to the property as well. So you could be pre-approved for $350, but if the HOA is $300 a month, now next thing you know, we might only qualify for $310 or $300. So we have to be very careful there. Same thing, we have some clients looking at single families and duplexes. And with the duplex, the cool thing is we're allowed to use the future rental income of the other side. And so now we have additional income to qualify you with. So you might only qualify for $350 for a single family residence, but you might qualify for $410 on a duplex, right? So you can kind of play around with those numbers depending on your goals and everything. So that's a big deal.
Now, interest rates, when we're talking about buying your first time home or buying a vacation home or buying an investment home, do those rates all stay the same across all those structures?
No, so they're definitely different. So if you're doing a first-time home buyer program with your own money, like FHA, for instance, will have the best rates. Like we're seeing some upper fives right now, which is really exciting to see for a lot of buyers. Again, leverage. You guys have rates now that are reduced a little bit, and you have inventory. So you get the leverage against the sellers when you find a seller that needs to sell, and you get a great rate in the upper fives on FHA. It's been incredible so far to help a lot of clients. So that's the first piece. If they're looking to do an investment property, the interest rates are usually about 0.5% higher on average. We usually advise people to put 25% down on investment, because if they do 20%, the rates are a little bit higher. They're like 0.75% higher. So that's obviously a big deal. Depending on the property type as well. Like if you're comparing a manufactured home, for instance, which we have a lot of in Florida, in comparison to a single family, the manufactured home rates are going to be, again, about 0.5% higher. So that's a big deal. So there's a lot of variables there, again, depending on if you're buying it as a primary or not, or if you're doing down payment assistance, right? Down payment assistance, we'll put a link below so you guys can actually see, like there's so many great programs in the state of Florida with Florida Bond, Hometown Heroes, Home Key, Home Sweet Home, TBA, Hands. Like I literally named 6 different down payment assistants. So we're spoiled in the state of Florida, and we can combine some of those. We can look at which one makes more sense. So we'll put a link below so you guys can actually see what the rates are.
And if you're hearing all these names and you haven't heard of this before, that's why you need to call him.
Yeah.
Because if you don't know these things, you're not going to know what you're missing.
Yeah.
So get educated first.
Yes. Yeah, for sure. There's
So
a lot
what's
of programs.
one piece of advice you would give to anyone right now who's kind of just in that neutral state where it's like, what do we do first? What's the best thing that you could advise them on?
We talked about that. We have Chelsea and I have 2 close friends. She actually works with her, and they've been on the fence about buying, and we're just like trying to help them, because obviously before they start growing their family, we want them stable, right? And we're like, hey, we need a house. Like you can't start growing the family in a rental situation, because it's
harder.
The sequence, the order it gets so much harder. And Chelsea are going through it right now with the little one, and we're like, hey, we can imagine if we had like a landlord on top of that telling us, hey, by the way, we're selling the home in 3 months, and now you're stressed out, you don't know where to go, you may not have the savings to move, and you have the little one, and you just add more and more stress. So I would say the first thing I would tell some buyers that are kind of on the fence, not sure, is the leverage that you have allows you to reduce your interest rate very, very low. And a lot of sellers, like I think we look at our entire pipeline and the average right now is $8,000 seller credit. That's crazy across. So that means some people are giving 10,000 or 12,000 and other people are giving 4,000 or 5,000. But there's a lot of seller credits being given, and that seller credit allows you to get into the home with as little out of pocket as possible. So, or you could use the down payment assistance and combine it with the money that you have already saved. So you're like, hey, Charles, I don't want to do down payment assistance. Okay, that's fine. But if you had 10% to put down and now you have 5% extra from the down payment assistance, you can do 15% down on a house if you want. Because you have your 10, you have the 5 from the state of Florida, and now you have a really good structure. And if you have very minimal funds, we can do it the other way around too. We can use all of the down payment assistance money, put it all towards your down payment, get some help from the seller, and then we reduce your cash out of pocket close to like 1,000 to 2,000. And even if you do have some of the extra money, because I wouldn't want you to deplete everything that you have, we always talk to clients and we're like, hey, we need to have at least 3,000 to 5,000 left over in the bank once everything is said and done, just for your peace of mind. If the AC breaks down or whatever, we're ready on the back end. But it does allow you to keep as much money as possible. Or if you were planning on borrowing against your 401k or something, we try to borrow as little amount of money as possible because we understand it affects your future retirement as well. So we try
But that's an option for certain people. You know, like if they have
It
a
is.
very healthy 401k, we've actually done that before, where we've actually had to dip in and grab some of the funds from there, and they were okay with it because they still have plenty of years to recuperate, and it made the most sense at the time. So that's another thing to, you know, you may not have as much on hand, but if you have been paying in or your employee's been paying in, you have built that up. Just know that's a place that Charles would probably ask some more in-depth questions and find out, hey, but there's something here we could also use.
Yeah, you can borrow against your own money, and that's probably the cheapest money you can borrow, right? And that's another crazy part is like you could have a credit card that's charging you 25, 27%. If you have a $5,000 balance on that and you can't find a way to pay it off, what I usually tell people is, okay, if we do that and if we do borrow against the 401k to pay that off, then we cut the credit card because I don't want you to be in that position ever again. And now it's going to be a lot easier to repay that 401k loan because you're only paying 5-6% interest rate instead of 27, right?
We get there quicker.
So yeah, we get there quicker. And the cool thing with the down payment assistance too is we can utilize if you do have some money saved and you were planning on using it for the down payment of your home, now we can use the money that you have saved to wipe out some of the debts that you have and use the down payment assistance to help you with the down payment. So the state of Florida helps you with the down payment. You have some savings. Now we can use those savings to pay off some debts. And next thing you know, you were qualifying for $250, but now you qualify for $280 because you paid off 3 credit cards with your money, right? So we can kind of play around with those.
Yeah, so I guess the synopsis here is there's lots of options.
Yeah, for sure.
And so if you're just not sure, then you just need to start the conversation, I think is what I would say.
One of the questions that I get asked a lot too from my clients is that they want to wait till everything's perfect, till that is the perfect price home, till it's the perfect interest rate, till they have enough money in the bank. All these things have to be perfect. And I think we've learned and there's no such thing as perfection.
Perfection is overrated.
Yeah, and it's never, you're going to get one thing or two things that are right. You're never going to get all of them. So something as simple as like the interest rate, you know, let's say I'm a buyer today. I found that perfect home. The price is right. It's not overinflated. My dad is telling me that the interest rates, you know, hey, you know, they're up than they were 2 years ago. Well, we know where we're coming from 2 years ago. So are we on that interest rate forever? Is there no way out of that after I buy this house, or is there options in the near future?
Yeah, I mean, in the near future, from a refinance standpoint, the chances are great in 1 year. The chances are greater in 2 years, and the chances of refinancing in the next 3 to 5 years are almost 100%.
So a 30-year mortgage doesn't mean I'm paying this for 30 years.
Correct. So that you have a structure of 1 or 2 years, maybe 3 years in place. So you have to make sure that you're comfortable with those structure as if you had to do it for 30 years. But we all know from a standpoint of where the pressure is coming from right now on the interest rate and the Fed, there's going to be some rate cuts come in. And when they do, you have to be ready to refinance. But here's the one downside that we see, and you guys have seen it through the past years, is when the rates come down, guess what? The other 50 families very, very close to the fence, they're like, oh, wow, the rates are better, do come out and start, you know, we see it. Like the second we see a little bit of a rate reduction, the phone rings off the hook. And so it's not that there's less people looking to buy. There's just people that are saying, oh, I'll wait until the perfect
They're on the
time.
fence.
And now we have families that are under contract on a home, $30,000, $35,000, $40,000 of equity on the purchase, and you're never going to see that ever again.
Yeah.
And people think that the homes are overinflated in Florida. They're not. Money is influxing from other states, right? And in fact, the home prices should be even higher in Florida than they are now because of the amount of money coming in and the tax regulations that the state has in place. It's very conducive for businesses, employees moving here, and as you see influx of businesses, growth means also more income coming in. More income means more money flowing through. More money flowing through means higher values of homes.
We just went to a conference where they were speaking about the economy and the market, saying when interest rates drop, they went jobs, they went interest rates. Well, everything's on a teeter-totter. So,
Yeah.
Daniela, when the interest rates drop, what's the first thing that goes up?
Everything. Houses, pricing goes up. And I think people are waiting. They're going to wait till the interest rate is perfect because the houses that they're seeing today will still be priced where they are. That's not how this works. When the rates drop, the homes go up. So, you have to kind of look at this as a long-term, the way I see it, long-term vision. And you can always refinance out of it. So even if you don't love the rate today, which by the way is not that bad, it's just not that bad. It's just we got a little bit spoiled.
If you zoom out in history, you'll really see how it's not that bad at all. Yeah.
Yeah, it's not. And again, there's nothing stopping you from refinancing. And I'm sure, if you have a lender already and you can have that conversation, because I'm sure more than likely they want to keep your business. Like if you had another client saying to you, hey, Charles, I want to do a refi, are you going to just let them go and not try to help them? You would try to help them and get them the best deal. And by the way, you've also told some of my clients before, like, this is not the best time to refinance, and that comes down to that transparency. Just like I say, I don't think this is the best house for you. I don't get a vote because I don't, but I'm still going to share what I see and what I think for you. And Charles has done that before where he says, yeah, it's just, I don't think if we wait a little bit longer, maybe it's a better time. But just keep that in your mind. Is like right now is the time because there's more inventory and pricing is better. Also, we have, as agents, we have more leverage, right? Like you were saying, asking for the sellers to give us credits, repairs to be done. Those were things that 3-4 years ago, we couldn't do. We were just happy to get a house. We were happy if they said yes. One time I put a property up, 32 listings in 3 days, 32 contracts were submitted to us in 3 days, where I finally just told the seller, I'm like, we have versions of everything. Which would you like? Top 5, here you go. That was that. And so that's not today's market. So this is an opportunity for us to kind of, which is why we're looking right now, to be able to get ahead of it. So if you're thinking about investments, this is the time to start looking and getting a little bit more focused.
Yeah.
Would you agree?
Yeah, I agree 100%. And I'm originally from Canada, so in Canada, the down payment requirements are a lot stricter. And so we're blessed here to have down payment assistance, 3.5%, 5% down to allow you into a property. Like we're spoiled in that fact. So let's not forget about that piece that like a lot of other nations require 10, 15, 20% down. And it's just a lot harder price of entry into the home. And now because it's so much easier to get into it, don't wait until every other big companies and investors end up scooping up a lot of properties where now everyone is fighting for it and you need generational wealth to be able to buy a home. Like now is the time to try to pull trigger, make sure that the numbers make sense and you're not deviating too much from how much you're paying in rent, right? Is the biggest piece. We have a big conversation about that at the beginning of how much do you pay in rent now? How does that feel? I'm strapped at $1,600. Okay, so then that means we need to be closer to 14 to 16, and then we have the expectations of what price point that would look like before we pull credit, before we do anything else, right? Because if it doesn't make sense, then maybe we need to scale back, come up with strategies to save some extra money to be able to afford a slightly higher purchase price. And then same thing, if you're paying $2,000 a month, but you're comfortable up to $2,500, then we can give you clarity on what price point that looks like with taxes, insurance, mortgage insurance, HOA, everything, right?
Yeah.
So
Yeah, and I think start before you're ready.
start before you're ready.
Start before you're ready, I think, in all things, right?
For sure.
Because if you wait till you're ready, you're never going to be ready. I can speak from experience. I'm like, oh, I'll wait till this or I'll wait till that. When I'm going to start my diet tomorrow. Start before you're ready, and just do it. And it's like as soon as you start doing the first thing, the second thing falls into place. And especially if you have people there helping you, guiding you get to the next spot, you're going to get there faster. And it's not as daunting as it seems. It's just motion. You got to get up, you got to be purposeful, and you got to make a list, check it off, and say, okay, everything, before you know it, it's done. And it didn't take that long. I've been in that little zone too, where I'm like, oh, I got to do this, I got to do that. Now I'm like, you know what? In 3 days, it was done. Mm-hmm. And I do this all day long for people.
This reminds me of the picture. We're going to put it here up on the screen, but it reminds me of the picture of like people who do it imperfectly actually ends up getting there a lot quicker than people that are trying to build the ladder perfectly.
Yes.
And you only have like 2 little ladders ready. They're like perfectly straight, but the person next door to you have like a full crooked ladder, but they're all the way to the top already. So doing it imperfectly, which is basically what you're saying, start before you think you're ready.
And be careful where you get your information from. One of the biggest things I see all the time is that a family member that bought a house 20, 30 years ago, and look at, we aren't even advising our clients on the stuff that we went and learned last year, because that's already gone. It's already changed. Yeah. And so when you're getting advice from a friend or a neighbor who bought a house out of state 20 years ago and says, you have to do it like this, that doesn't mean it's going to happen that way in Florida. It doesn't mean you're not missing opportunities, and it doesn't mean that's how the laws still are. So we have to keep getting updated and getting more education, which is why we spend the money to fly over the United States and get these updates so that we can advise properly. So speak to somebody like yourself, speak to somebody like my wife who knows all this information that can really answer those questions and advise you updated in today's market.
So that's leading up to a good segue, because like, let's say I had a client for you guys and I say, hey, I have a great referral for you. They're looking to buy in Pensacola in the Panhandle. Mm-hmm. Then what would you guys tell me? Like,
well, if it was me, you want to take that?
No, take it.
Okay. So I would first go into our referral network and see who we already have built relationships with in that niche. If we haven't, then I'm going to go next level. I'm not just going to pull a name. I want to make sure, do they have a team? How much production have they done? You know, what is their service model?
So you wouldn't be driving up there to try to do the transaction
I would not,
yourself?
because I'm not a specialist in that area. And so it doesn't serve anybody to try to do, what's the old saying? Jack of all trades, master of none. And I firmly believe that, because what you focus on expands. And if you're doing 17 things and you're pretending to service all these areas, you don't really know that market. So the best thing we can do is leverage that piece out to an agent who knows that market, just like referrals come to us and they say, hey, you guys know Tampa, Orlando, you know Lakeland, that's your little pocket, so we want to give this to you. That's the best advice, you know, I would say, is like, I'm not touching that. I'm here to help you. Yeah,
we're licensed for the whole state of Florida. Yeah. But we choose not to, so that we can give our clients better service.
But we stay involved. Yeah. So for me, when I give a referral, I don't just go, here you go, and good luck. I'm constantly checking in, probably every 2 to 3 weeks. And I expect the conversation is to the other agent, can you keep me up to date as to where we are? Because I want to make sure that the client understands, so that they're not having a disconnect, right? Because maybe we're connected, but they're not. And maybe I have to be that in-between person to say, okay, what's going on? What's missing? Where are we at? So I think it's important, like, not to try to do all things. If it's not your area, leverage it out, but still service the client. That doesn't mean you just stay away.
Yeah, because that referral is still an extension of you guys.
It is.
Right? Absolutely.
If the process doesn't go well, then they'll remember, hey, Justino and Daniela actually referred me to this.
Exactly. So I think it's important to still stay in it.
Yeah.
But not micromanage it, because that's why that agent has, you know, the experience in that area. So if that agent is saying, well, this is not as functional here, or this is something that's a little different in this niche, then I'm going to lean and trust that person. But if that person is not communicating with our person, it's bad alignment, and it needs to be course corrected.
We've helped people all the way in Las Vegas. I've got somebody in Miami right now. Like, we're staying with them to make sure that they're getting taken care of. So, you know, like you said, you're following up and making sure that they get the right answers, and we're kind of checking, make sure that everybody's doing their job too. You know?
Yeah. And it's good for you guys long business-wise too, because you're probably going to get continued referrals from that same family, like you said, relationship over transaction.
Yeah.
There's a lot of realtors that are transactional, and they don't actually like build a relationship. And Daniela and Justino know that, because obviously that's where 90%, 95% of your business comes from, is from referrals of people you've served in the past. So, so that's a big deal of trying to make sure that the transition between one agent to the other is very smooth. And that also the extension of their service is a reflection on yours too.
I love working with somebody that actually used another realtor in the past, because they have something to compare it to.
We talked about this
Kind of
yesterday.
like what we talk about lenders. We can compare it now. And it was really funny is that it was about day before yesterday, I worked with a client out in Tampa, and it was hilarious to me that I walked up with all the stats and the data and the information, the packets that I gave her for the tours that we were going to look at, and she goes, "Oh my gosh, you're like the Ferrari of realtors." And I lost it.
I love that they said Ferrari.
They said Ferrari, and I'm like, well, that's like a double-slatted insult because my wife and I are Formula One
Ferrari
fans.
fan.
He's Ferrari, I'm Red Bull. So it was like, no, that was an insult, but it was really
If you're
funny.
a Formula One fan, call us.
Yeah.
It doesn't have to be about real estate. Just call us.
We will help you all the time, but if the race is on, you're gonna probably have to wait a few minutes.
Yeah, for sure.
Yeah. Well, I'll still help you.
And if you're a Ferrari, don't call Justino, just call Daniela and I.
No.
And if you're Red Bull, definitely reach out to Justino.
Yeah.
Or McLaren, I like McLaren. Lando's doing good. Yeah. Yes, not so much.
Yeah.
So I guess anything else anybody would like to add that you feel would add value to anybody who's in this in-between spot right now, not knowing what they should do? Or do you think we did a good job covering?
Yeah, I feel like clarity and leverage are the two biggest words. Having clarity on where you need to be, what makes you and your family feel comfortable. If you don't have clarity and a game plan on what you need to do to be there, it's probably the first thing. And the second thing is realizing how much leverage you have now, and you may not have that kind of leverage again for 10, 15, 20 years. So realizing that is a big piece. And I've been doing this for 10 years, and I've seen it up and down, and I've seen what kind of leverage, when buyers start losing leverage, what it does and how difficult it gets to be able to afford a property, and the home prices just skyrocket when that happens. So take advantage of that little setback that we're seeing now to be able to leverage from the seller some repairs and some negotiations on the price and seller credit and so forth.
Yeah. Great advice. So yeah, how about you?
Honestly, just don't forget that we're trying to make sure you guys get as much information. And this channel is not sponsored by anybody. We're sponsored ourselves. So do us a favor and please hit like on this video and subscribe so we can keep you updated as the laws change, as the rates change, and give you better advice on your future purchases. But Charles, I think that's it. Thank you very, very much for taking the time here today.
Of course. Thank you. I appreciate you guys.
Yeah, just give us a call, JDZ Luxury Team, and we'll be here to advise you. And it's free to call. There's no prepay before you get some advice, right?
Well, if you guys want to write me a check, I'll take it. But no, everything is free for sure. So.
People are scared to go down that road. No, we're not a website you put a credit card in to get some information.
Yeah.
Give us a call. Let's have a chat. And if you get nothing out of it, maybe you got some information that you can have a better decision when you're going to start the process.
Yeah.
So.
And knowledge is power.
Yes.
Knowledge is power.
For sure. And who you know. So definitely.
That's
and who you
probably
refer.
more powerful.
Thank you very much, guys.
Thanks,
Anything
guys.
else, Daniela?
Thanks for tapping in. Nope, we are here. We're open to questions. So if something pops up that you're not sure that we didn't cover here, just make sure to message us. And we'll
Message
get
us
back
below.
to you.
Yeah, absolutely.
Appreciate
All right.
you.
Bye.
Thank you.
Thank you, Charles.
Thank you guys.
Thanks, guys.